Good morning friends, welcome to the pre-market update. Let's start with the global market checkup. Overnight, last night US markets ended in the green. It staged a very smart bounce back on the Dow Jones, 154 points up because of the good news data that came in of the jobless claims that was better than estimates. Also the jobs report has come out stating that the American economy has kind of moved on a very smart basis, and the people applying for the jobless benefits have gone down. So that data has cheered the markets. Also, on coming back to the Asian indices, Nikkei, Hang Seng are all up by anywhere between 1 to 1.5%. Even if we are looking at the SGX Nifty, it's 20 points up right now. So we would expect a green kind of opening hour for our Nifty as well. On the FI figures, yesterday also there were sellers to the tune of 758 crores. These are the provisional figures. And on the other side, DIIs also sold almost stocks worth of 15 crores. So we have been observing for the past couple of sessions, FIs are heavy sellers in the market. Today has been the expiry day, so we would expect a lot of volatility in the market in the last hour of the trade. So that's all from the global market checkup. Now I'll give it to Sadhna for the derivatives checkup. Thanks.
Good morning friends, let's have a view on derivatives. Yesterday Nifty started the session on flattish to positive note, but initial number of trades Nifty continued to trade in a narrow range and oscillating between positive and negative territory. But later soon the verdict of Supreme Court of deallocate all coal blocks, fresh round of selling came in the market and Nifty breached the psychological level of 8,000. But that selling was lived very short period of time. Nifty soon have taken support at 7960 levels. From there it recovered sharply and Nifty finally snapped its session with a marginal loss of 0.21%. In this period we have seen that short positions were built up as open interest is increased by 3%. Approximately 5.99 lakh shares were added in yesterday's trade and Nifty futures price decreased by approximately 16 to 17 rupees. On the other hand, cost of carry increased by 75% from 33 to 58%, along with Nifty futures premium decreased from 14 points to 12 odd levels. In yesterday's trade, PCR was down by 2% from 89 to 187, which is clearly indicating that call option has seen good build-up than put option. From 2 consecutive days, we have seen that call option is adding good number of shares than put option. India VIX was up by 1% from 12.41 to 12.54%. In the options activity, as we have seen that call option strike of 8,100 has added good number of shares in open interest, but simultaneously 8,200 has reduced its shares in open interest. In the options activity, put option 8,000 and 7,900 has seen huge reduction in open interest terms. As of now, 8,000 stands with highest number of shares in open interest. There are 3 securities in ban period. One is GMR Infra, second is India Bull Real Estate, and third is JP Associates. Yesterday, FIs were net sellers of 164 crore in Next futures. They were net sellers of 978 crore in Next options. They were net sellers of 588 crore in stock futures, and they were net buyers of 23 crore in stock options. Our 5-day CVAP stands at 8110. Our lower range for the market will be 7950, and higher range would be 8110. 8110. This may act as a hurdle for the market going forward. Singapore Nifty October future stands at 8078 level, which is 14 points up, but September future is currently down, so we may see a huge intraday whipsaws in today's trade ahead of future and options expiry. That's it from derivatives. Thank you.
Hello friends, welcome back. Let's start with the pre-market actionable ideas, followed by the watch list and the news and other updates. We'll start with the long ones, starting the IT pack. Accenture yesterday evening came out with the results, which has surpassed the quarterly revenue estimates by 10% to $7.8 billion. Expectation was $7.5 billion. So that's again good for the IT pack. Action, it will have a positive effect on Infosys and TCS. So we long Infosys, stop loss 3626 and target 3680 on the upside. Action again positive for TCS, so we long with a stop loss of 2619 and target 2680 on the upside. Next is Liberty Shoes, the second largest shoemaker in the country, have mooted plan for retail expansion in the 7 states. They are actually planning to open 100 new stores overall every financial year. So that's again a good expansion plan. The best part is the country's second largest shoe had opened across the kind of 40 new shops across the country. So this again, they are actually going on the right pace. And they are able to kind of gain the market share also. Action long Liberty, stop loss 294, target 306 on the upside. Next we have is the short ones, JP Power, CMP 13.65 due to prevailing regulatory and the uncertainty surrounding the company as well as the sector, which has impacted the valuations. R Power has gone ahead and cancelled the $2 billion deal that they were going to acquire the JP Power assets. Now this is definitely a big debt negative for the company or as a JP group, as they have a debt of 56,000 crores and they wanted to retire almost 15,000 crores this fiscal. Now this approximate $12,000 deal is scrapped, so they have to look for another buyers as well. Action short JPBL, stop loss 14.1, target 12.5 on the downside. Approximate $12,000 deal is scrapped, so they have to look for another buyers as well. Action short JPBL, stop loss 14.1, target 12.5 on the downside. Next is PSU banks. Banking shares, mainly the PSU banks, have exposure to the coal mining companies as well as the power and steel companies, who are the indirect kind of affectees where they use the coal for their production. Now they have been kind of non-performing assets due to their kind of exposure to the coal mines. So there are certain banks who have a lot of NPAs and liabilities because of this Supreme Court verdict that came out. Action short UCO Bank, from that pack, stop loss 84, target 78. Another bank we also feel is going to be affected is IDBI Bank. So short that bank, stop loss 69, target 65. Another bank which has major exposure to the sector as OBC, so short OBC, stop loss 258 and target 246 on the downside. The CMPs have been given, so accordingly you can short at that level. Watch list for today: Reliance Infra, Dr. Reddy and DLF are the stocks with positive bias for on the intraday basis. On the other side, stocks with negative bias, we have Can Bank, Bharat Forge and State Bank of India. Other news and updates, the Supreme Court yesterday gave out a verdict, all coal blocks except the government-run non-JV allotments would be definitely be deallocated. Out of 218, only 214 would be deallocated, and the 4 which belongs to the SAIL and TPC and the SASAN, that is R Power, would be kind of barred. They won't be affected. Since the combined now the retail entity of the Pantaloon Fashion Retail will trigger a 10% cap for foreign investors. So that's again a trigger for the kind of company. L Capital, Temasek and IFC talks to buy stakes in the combined entities, comprising department store, Pantaloons, Madura Fashion. So this again some kind of movement are expected in the Aditya Birla Group. India said on Wednesday its board had approved a 10-for-1 stock split. Now this will reduce the face value of each share definitely to 1 rupee per and increase the liquidity in the stock. That's it from the advisory desk. Thank you friends and have a nice trading.